Good morning and welcome to part 4 of Real Estate Economics weekly webinar series. This particular series is covering the greater Seattle area. If you've been watching up to this point, you've seen us provide a little bit of history for this area. We've gone through the economic analysis and showed the employment, unemployment, appreciation, sales volume trends, and made our 5-year forecast. What we'd like to talk to here is that there are fairly decent indicators for what's taking place on the ground in the housing market outside our analysis and outside of the opinions of real estate economics. If you look to materials prices in this particular slide, this is lumber, 2x4 framing lumber. This particular product or commodity is traded every day on the Chicago Mercantile Exchange. Contract size is 110,000 board feet. The price scale on the right is price per 1,000 board feet. So as you can see here, recently peaked about 320. If you look over this whole series, because this is a fairly long series, you can see on the left-hand side, price of lumber came down very, very hard in response to the credit crisis and the recession. Just no need for housing, no need for new homes, no need for remodeling and construction of not just residences, but many different types of buildings. But then, as you come into 2009, you start to see a little bit of recovery, and the market goes up and down as perceptions change and people try to decide, are we having a good recovery or weak recovery? Then suddenly in about October of 2009, we start to ratchet up pretty quickly. Now, part of this is we're at a very low base at $180 per 1,000 board feet on a historical level, but by the time we're up towards the top of this, about April of 2010, we're actually getting a little bit concerned that this market, the lumber costs themselves are overheated. We'd like to see this be steady and positive, but we also don't really want to see it add $2, $3, $4, $5 per foot to house construction costs. Since April and during the course of this month, this number has come off quite significantly from about 320 down to 260. I think this chart's from yesterday. So again, we're in an inflection point where many of the people who want lumber for this particular year may have taken delivery of that. They might be looking at a previous contract and are in possession of that. Nobody wants to take possession of the lumber late in the season when they want to build during the warm summers. This is particularly true in some parts of the country. And we could also, we've had the Greek problem, and so that could be making the market question how deep the demand is and what the back half of 2010 is going to look like. We'll watch this very closely, because as I mentioned, we'd like to see a good demand for lumber, but we also don't want to see this particular area get too hot. We can make some other thoughts and analysis from publicly traded companies. This is Louisiana Pacific Corporation. They're a maker of oriented strand board, wood subfloors, truss systems, engineered wood products, that sort of thing. This particular chart goes back to early this year. You can see from the left-hand side that we had a gradual improvement, then suddenly expectations ratcheted up that these products were going to be in much greater demand than previously thought, and the potential for earnings for Louisiana Pacific ratcheted up pretty quick. Those have come off just as quickly in March as or in May, I should say, as we've come into the Greek situation and the whole problems in Europe, which really have the potential to keep the US dollar a little bit higher than we'd like, and that ripples back through employment and our whole export market. Just quickly, some conclusions on what we've seen for this particular market. Employment's held up much better here. If you're living this on the ground, it may not seem like it, but if you look across the West, unemployment rates are lower here. This market did not have a huge construction-related employment boom in 06 and 07, and it has a great technology base, as I'm sure everyone recognizes, and that's helped keep the market steady on the employment front. Foreclosed homes, we're really starting to see these channel back out to the market in short sales now. There's definitely a possibility that many of these fact, we know these foreclosed homes are being culled by rental investors, landlord types, remodelers, people who want to buy the homes while they're at historically cheap rates, hold those for a few years, rent them out, frequently at a positive cash flow on day one. The prices have gotten so low in some neighborhoods, and they'll put those back out on the market when there's some appreciation shown. We think there's a fair number of households that want to rent and will rent instead of buying now. We see students coming home, seniors coming back to the core family unit, a lot more multi-generational living as a cost-saving measure. And there's not that many rental units that fit that household type. If you need 3 or 4 or 5 bedrooms and 3 parking spaces and this sort of thing, there's not that many rental units that can fit that demand. So there's a fair number of foreclosed homes that are going to be better at meeting rental demand than new buyer demand. Part of that is, if you're a new buyer, do you go into an area that's maybe half the neighbors or 10% or 20% of the people living there now are about to hit the wall. You don't know what their employment condition is like. You don't know what sort of loans they have. You could go into a neighborhood where values are not that stable, and some of those people are going to get flushed out. Or you can buy a new home in an area where you know what the values are, all those people have qualified for loans, and you just don't have the same risk. So what we've seen from that is a reasonable premium for a new home product, even in a market that could be considered soft and in some sense overbuilt. We think a lot of college graduates and people changing employment fields are going to be hesitant. We've definitely got a confidence problem. It may not be that great of an advantage when you're searching far and wide for a job to be married to a home, so we think people are going to let their employment conditions settle, particularly new buyers, entry-level buyers, and first-time buyers. They're going to prefer to maintain a high degree of mobility until their employment situation is ironed out. We saw the demographics earlier on the huge numbers of mature buyers and pre-retirement buyers that we believe are floating around the country. If you look at this particular recession, this is a recession that disproportionately hit people over 50, higher income workers, males, and there's a couple of groups that were hit harder. We think a lot of the older buyers and mature buyers were in fields that are not going to return to employment levels that they enjoyed previously, and so those people are going to examine their living conditions, look for low-cost states, and look for areas that have a lot of appeal and living advantages, including cost of living. So we think people building subdivisions and any sort of product that you could incorporate a mature buyer product ought to strongly consider that going forward. We think a lot of this mature demand is going to outlet to states with good fiscal conditions. Washington State, like all the states, is struggling. Right now their deficit is fairly high. It's always difficult to gauge the political will to deal with this and how this is going to play out, but just an issue when we're talking about our mature buyers. Quick review of what we are, and you've seen our weekly presentation. Almost all the products that you've seen, almost all the slides, charts, maps, graphs, diagrams are in our online programs and our subscription products. So if there's any areas you're interested in, go to our website. You can get a free membership that will allow you to look through those, test those out, see what suits your needs, drill down to your local neighborhood, and really stack the deck so that your particular community or your particular interest in the housing market can be satisfied. Don't take the chance. The data's there, the research is there, the forecast is there, and we're happy to provide that and share that with you. This is our team. Mark Bowd is our principal and founder. I'm John Mulville. Judy Duell is our salesperson. She's the one who you should speak with about any subscription products, what best suits your needs, and what's our service capabilities in your area. And Sandy Rivera is our customer support. If you get any of these or you want to use them to their fullest abilities, call Sandy and make sure that you're doing that. Please join us next week. Thank you for joining us today. Please join us next week for our Texas webinar, 9 a.m. on Wednesday. Thank you very much.